And the measures President Trump proposed include a payroll tax cut and help for hourly workers as a way to ease the economic fallout from the coronavirus. Joining us now is Doug Flynn. He's a certified financial planner and co-founder of Flynn Zito Capital Management. Doug, here, real quick, your reaction to the market now, the Dow down at 3.8%.
Yes, we're getting back to close to the 20% drop that you really need to have a more realistic correction. We normally have those once every 2.5 years, and we haven't had one. So, you know, the catalyst that was needed to create this, unfortunately, was the coronavirus. But here we are. We're going to touch up against that 20%. I think you need to kind of get through that and then see where you can sort of create a foundation and then look at, okay, where do we go from here?
What about this tossed around stimulus package, if you will? How would this affect the markets? How would this help the everyday investor?
Yeah, I think the stimulus package, everything helps right now. So you want a concerted effort across, you know, all fronts, both from the business front and also from the government. I think that would help because it would put more money into people's pockets. Now, they're not going out and going to dinner. They're not flying. They're not doing some things with it yet. But hopefully when things die down a little bit or settle down a little bit, people start to resume their normal behavior. And that's where some of that money can get invested or saved or spent. And that's really what you need. But people will feel the impact. That you also have the lower oil prices, which would lower their prices of what people are paying at the pump. That's going to put more money in people's pockets. And so those are all good things. I don't think that's a bad thing to do a little reprieve for a little bit.
Talk to me a little bit about the airline industry right now and how that's playing out in the markets, because if you look right now, prices for flights are drastically lower right now. That's got to have an effect on the market as well.
It is going to have an effect, and it's going to have a short-term impact on these airlines' bottom lines. I mean, they're offering low fares, they're offering cancellations and movement without any penalties. They're doing everything that they can do, of course. They're cutting back. And, you know, look, I think about after 9/11 when the entire country shut down from flying. You know, there are other instances of where this happens, and then it's like anything else. We're basically in a free fall, and people are trying to react. You know, you went from a 24-hour news cycle when we all created 24-hour news channels to now we're at like a 24-millisecond news cycle. And you know, at some point, people just need to take it easy, let things settle where they are, and then make some changes and some reactions to it. You don't want to react during the middle of a free fall. Those are the kinds of things that can hurt you, and you can make some bad decisions.
Are you seeing some people that may kind of stay out of the market now finally jumping in because it's lower?
Well, it's funny you say that. Honestly, about 95% of the calls that we're having with clients, there are people who actually realize that this might be an opportunity. Some of the investments that they wanted to buy for a long time that had gotten away from them are now getting more moderately priced. It's an opportunity as an entry point, not to take advantage of a bad situation, but just looking at it from a valuation standpoint, there are some opportunities. Now, some people would call that early. We've had one or two people who have expressed concern. But at the end of the day, if you have the right allocation or you have money that you don't need for 10 or 15 years, that's the kind of thing that you want to take advantage of. You shouldn't have had money in the market that you needed tomorrow anyway, or you should have gotten out when we were at all-time highs a couple of weeks ago, actually, is where we were. So that's the way you want to look at it. There are people that are looking at maybe there's some things that we could take advantage of here.
Then what do you tell the everyday American that has money that's been sitting in their 401k for quite some time? They saw their money go up over the past couple of years and just taken a huge dip. How do you quell those fears?
Yeah, so what you have to do is if the volatility that you've experienced now, and that's going to be similar to the volatility that you experienced in December of 2018, those are gut checks. If you can't handle that, that's the first sign of saying, you know what, I probably need to dial down the risk of what I have. And now, I wouldn't do that now. What I would do is I'd put a pin in that, and the next time we get back up to all-time highs, which we will, that would be the point in time to remember how you felt right now and dial down the risk then. Just like a couple of weeks ago at the high, those would be the times to take risk off. That's the way you want to do this. But use this as a gut check to say, okay, I'm not going to make any changes, but I recognize that maybe this is too much for me. The next opportunity I have at a high, I will make those changes. That's how you don't make a mistake at a bad time, because we will get through this. At the end of the day, you can look at previous outbreaks. Only one of which maybe have went into a recession. The rest did not. And we're talking about when tens of thousands of Americans died, and we still didn't go into a recession. So, we're not even talking about that, but we're so second by second following every person that's getting sick. That's the way you have to look at it. Take a little bit of a longer view.
I got to stop you there. Very important point that you brought up there. We'll end on that. Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management. Thank you very much.